Here are 3 things that you need to know about life insurance. Let's start with number 1, term or whole life. So let's start with a term example. This is Tracy and John. They're a couple in their 30s that have 3 kids, and they actually are doing pretty well. Together, they make about $180K. Tracy's pulling in 80, and her husband's pulling in 100. But the scary thing is, if one of them were to pass away, they would have to downsize in the house with the 3 beautiful kids, and they might even get stuck with their spouse's debt. But luckily, Tracy and John are actually in pretty good health, and they're young. So because they have the mortgage payment, the car payment, and the income replacement, right? Because they're making 80 and 100K, they would lose about half of their income if one of them were to pass away. They opted to get a 20-year term policy. And so when you're looking at how much coverage you want to get, you're typically going to 10x whatever you're making a year. And so you can see that 80K becomes 800 and 100K becomes 1 million. And so what they did was they ended up getting more coverage for less money because they have time on their side. And because this expires, it's going to be less expensive. And that's why they decided to go with the term to cover all of these extra bills and to make sure that they can invest the difference of what they would pay for something more permanent. Let's talk about whole life real quick. Let's take Sally, Sam, and Sam Jr. for example. So Sally and Sam are a retired couple that are taking their Social Security income and their pension every single month. But if Sam, senior, not junior, were to pass away, then he would have to go with one of these 2 options. With a burial looking to be about $15,000 and a cremation looking to be about $7,500, who's paying that? Is it Sally or Sam Jr. with their empty pockets of grandma being on the fixed income and Sam Jr. thinking about getting his next house with his wife and kids? Are they going to go into debt or even have to pass the hat around at the funeral? Or did Sally and Sam make a smart decision, and because they were pretty healthy for their age, they're in their 60s, they were doing okay, and they didn't have to replace all of these bigger payments up here, they decided to get something that was going to be locked in, safe, and secure to cover one of these bills. They decided that both of them wanted to be buried, and Sally and Sam decided to get $15,000 in whole life coverage. So you're probably wondering, what does that look like? Well, the coverage is going to be lower than it would be with a term policy, and it's actually going to even cost more. How does that make any sense? Bear with me, because it's guaranteed for life. And so just like the name sounds, it's whole life insurance. It lasts for your whole life. And so while you are paying a little bit more for less coverage, it never goes away, and it's there when you need it. So regardless of how long you live, you'll be squared away. And so just to recap real quick how number 1 works, if you're somebody who's a little bit younger, healthier, and you've got a lot of big bills that you want to cover, you're probably a better fit for one of these term policies where you find that sum again by multiplying your income typically by 10x, and that's more coverage for less cost, and you're typically going to want to invest the difference. If you're someone who's in retirement, you're like Sally or Sam, and you're looking to make sure that your family's not going to get stuck with the bill when something happens to you, because guys, the mortality rate in the United States is 100%. It means it's not if, it's when. And so if you're just like Sally and Sam and you want to cover this bill right here, you're more than likely going to want to get whole life coverage where you're paying a little bit more for a little bit less. But remember, it never goes away. So the second thing that you want to remember is that you qualify for life insurance with your health, not your wealth. This is a list of a bunch of fake, made up, boring insurance companies. And here is how they're going to figure out what they need to offer you by doing a bunch of boring math and statistics. So we came up with a few different people here. We got Jim, Joe, Jeff, and Jill. Now Jim has diabetes, Jeff has a heart attack previously, and Jill has high blood pressure. And so Jill might be able to get a really good rate from Boring Insurance Inc., and Jeff might not be able to get a rate with them at all. But maybe he can get a great rate with the Insurance Company of America. And so what I want to touch on is that, guys, we're always going to pay more than women will for their life insurance. Why is that? Well, because we do dumb stuff. You can see here we get the guy on the bike. I'm telling you this not because of this little funny drawing, but because we're going to ask you a couple questions here when we hop on the phone. And one thing to remember is you're not being interrogated by the FBI. What we're doing is we're going through all of these boring companies and sifting through all of these tons and tons of plans to find the best policy for you. So let's talk about number 3, which is actually the most important part of all of this, your why. So it's got 3 components. It's your who, your what, and your how. So let's talk about your who, right? This would be kids, grandkids, husband, wife, girlfriend. You're like me, it's my dog. But I want you to take a second and close your eyes with me and really picture what it would look like for them. If you were to pass away, what would they be responsible for? The house, the mortgage, credit cards, car payments, the funeral, or are they gonna get an inheritance, leftover money, something that you're leaving behind for them? And so let's talk about the how. Your goal is to pay off the house, cover the funeral, give them an inheritance, make life easier, prevent generational debt. So you want to know your why. Some coverage is better than no coverage at all. Because if you have no coverage, no plan is still a plan. It's just a really, really bad one. Life insurance is the last love letter that you'll leave behind to your family.